Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're continuing our coverage of the absolute bloodbath on the charts. As you can see, Bitcoin's price just continues to bleed down on the higher time frames, just relentlessly. And of course, that's why I've continued to mention to you guys, if you do take a buy, a purchase, always be selling. Always be taking your profits. Whenever you get a bounce, take your profits. Guys, this market has no mercy, okay? Like the things that are going on in the world, I've been covering this since November. I've been letting you know. Do not be hodling until you have a clear accumulation pattern, and even then, it can't be at these high levels. You guys know what I've shown you, right? I created the alpha channels specifically so that you could have a way to visualize, where we are. And if you take a look closely, of course, we didn't get our hypothetical blow off top. It's sort of like we got the price action in advance, right? So, that was the true overheated moment, and it was just spread out over these two peaks in this kind of reddish zone, right? And then we started to cool off, and we were in the purple zone, and I still told you guys, don't be buying hold positions. Other gurus and other like just, weirdos and these pump and dump groups, all of this stuff, they try to push you into hold positions while you're in the overheated area of the chart, and it makes no sense. Guys, you can do fib retracements, you can do all sorts of different measures to show that we were just vastly overheated here and you didn't want to be taking hodl positions. Additionally, of course, we had the fib channels to the downside, which suggested that we were going to get reflected, and we absolutely did, right? We absolutely got reflected down, and it has just been relentless, just like in 2018 and just like in COVID. People should not have been surprised that it was going to be this painful and this fast, because that's how crypto works, okay? It's just dominoes falling. We're now at the point where we have institutions trying to liquidate each other. Previously, up here, when everything's nice and glorious, of course, the institutions are trying to liquidate you, right? They're trying to take your money. But once we cross this yellow line, you see this yellow line? Look at this perfect break. This perfect break right over here in 2019. This perfect break in 2018. Guys, I have encapsulated the secret of how Bitcoin moves, and all you had to do was take a look at my alpha channels, right? We knew this break was coming. I showed you the EMA crosses, and sure enough, we dumped. If we had made it up to here, we would have dumped, but the fact that we didn't make it up to there meant that this move was just continuing. Who knows what this was? Maybe this was just a delay of this kind of pattern, just some sort of fake out. But anyway, once we crossed that yellow line, it was inevitable. We were going to initiate some type of accumulation actions, and as soon as the market started getting liquidated, which I suggest was is represented by this white line, this kind of magical boundary here, where everything flips over from liquidating, individuals to liquidating institutions. And once all the institutions get liquidated, then and only then have we capitulated. Past tense, right? So we are in the process of capitulation, but we have not capitulated yet. What does that mean? That means we haven't started to put in a post capitulation accumulation pattern. And we need to see an accumulation pattern in order to feel comfortable to buy in and hold. Okay, guys? I just want to emphasize this to you. Just because I have green boxes, on the chart, These are just suggested areas where Bitcoin could possibly bounce at, where Bitcoin could possibly find a nice, a place to buy for trades. It's always been about trades. And when I say DCA in, I just mean DCA in at these regular intervals at key zones, and then follow the motto of this channel, which is always be selling, always be taking your profit. This is a crazy downward falling knife market, and you do not want to be holding on to positions if we're going to have Cold War II, if we're going to have Civil War II, if we're going to have World War III, right? If we're going to have the Great Depression too. If we're going to have, some type of Google AI Terminator ascension, we do not want to be holding onto these assets unless we are confirmed in the extreme value zone, right? In the extreme value zone, as designated very conveniently here by this channel's special special chart called alpha channels, right? This is just something that I made up to help you guys visualize where you could possibly consider to start holding. And guess what, guys? We're there. We've entered the possible hold zone, okay? Yes, up here is just, this is honestly, the red zone up at the top is take your profits. Don't be a greedy a-hole. Take your profits every single time and just shorten your expectations. Just take your profits and please put food on your family's tables, okay? And then, guys, this purple zone, right, cooling down a little bit. We've cooled down so much, you have to understand that it might be good trading, there might be lots of liquidity still in the market, but you are just the prey of the institutions in this purple zone, okay? Like they're not trying to push the market up anymore. They're going to try to take all of your money before they start turning on each other. And then when we break below the yellow line, the institutions are just going to be killing off the last remainders of the faithful in crypto, and then they're going to turn on each other and they're going to be trying to liquidate every institution. That's what you've been seeing. And so that's what we've been waiting for. That's what this green bar has represented on my alpha channels. It has represented that crossover point where we're now at the red line. And below here, guys, we're going to start looking for accumulation patterns, sort of like what was put in 2018. And you don't want to do it before we enter this green zone, right? Before we tag this red line, because, most likely you're going to be faked out just like up here in 2019, where they faked you out before COVID. And, this was just a regular quarterly backfill. This was a normal price action. I mean, it probably shouldn't have been as sharp, right? But you can see how sharp our current price action is. Is there really that big of a difference? You know, there's no COVID going on right now, and this was a totally different economy. So this is how charts work. Look how sharp this one was in 2018. Sometimes people make such a big deal about this being a black swan event, and I really think that this was just the tolerance of the market for risk. That's it, a normal tolerance calculation. It wasn't everyone in crypto was freaked out. Everyone in crypto was bullish, guys. Right? There was no one in crypto who was just freaked out. It was only because the institutions were underneath this yellow line, and then they had crossed the white boundary, which is there's kind of like a point of no return, right? And they started to feed on each other. They started to feed on each other. You saw this free liquidity coming into the market. It was going to happen here in November 2019. But you know what happened in November 2019? The government started talking about potentially releasing money into the market because of the possibility of a global pandemic coming up. And so different parts of the market started pumping, right? Because they started getting prepared for all that pandemic stuff. And so we saw this kind of relief bounce that took us above the white line temporarily, but they couldn't stop the forces that were at work. And so while people call this a black swan event, I really think a lot of people in this industry are just ignorant and they're learning things, on the fly. Most likely this was the pattern that we were going to put in, and simply COVID gave us a bounce. Do you understand? It gave us a bounce before we just corrected. And the reason is that governments started talking about potentially releasing capital into the market, potentially money printing. And that rumor kind of pumped us up. And it was only until the crisis really got kickstarted that the money really came in. And that's why we just got the massive pump, which maybe, let's be honest, maybe it could have taken longer and then resulted in a blow off top. And then we would have just seen this natural pattern, sort of like what we have over here. So, guys, I just want to share with you these thoughts because what you're seeing is not unnatural. It's not a black swan event. It's even COVID was not a black swan event. This is what Bitcoin does, and I've unlocked the secret for you guys. I'm showing you how Bitcoin behaves, and I've been showing it to you on this chart for months, and we've been talking about reaching this area where we're potentially going to start to see an accumulation pattern on one of these levels, either touching the red level or around, or in the green, right? And of course, the liquidity in the global markets has dried up. So, what does that mean? Potentially, it could be deeper than we expected, right? It could be deeper than we expected because that dried up liquidity, that smaller amount of money to just boost the pot up, that's kind of the equivalent of the extra scariness that we got from the virus back in 2020, right? So that extra scariness, the extra scariness of there not being enough money in the market could potentially pull the market down lower. And so we don't want to be buying until we see the accumulation pattern being put in, right? Those higher highs, just like we had here, but we want to see them at the red line or below the red line. We don't want to be buying up here like idiots. We don't want to be buying just in the middle of nowhere. We want to be buying where the smart money buys, which is in this area, right? So, guys, congratulations if you've made it this far. If you're thinking about selling, just personally, I would not sell at these levels. You guys can, of course, do whatever you want to do, but I think the opportunity to sell anything that you might be holding was really your last chance, which I told you guys that was the last chance at, that yellow line. And in fact, I told you up here at 47,000 that you should probably, you know, if it was my money, I would get out of it at 47 up here. And then this was the last chance. And then, of course, the white line is just when the institutions turn on each other because all the liquidity is dried up. And the only thing that they can get, the only blood left in the water is each other, and they will cannibalize each other. They are relentless and murderous, these vampire VCs and all these whale groups. They've just been savagely destroying retail investors for months and years, and now they reach that point where they're still hungry and they feed on each other. Of course, they're all over leveraged, and many of them will not survive. And that's why it's eat or be eaten. If they don't eat their competitors, their competitors are going to be the ones that win, and they're not going to be able to pay their leverage bills, right? So let's go ahead and just, again, put on these DCA zones, which we've been talking about. Of course, I just want to emphasize again, the DCA zones have always been for trades as long as we're above that red line. But finally, we're in those areas where we can start talking about the possibility to hold, but only if you see an accumulation pattern. Does this look like an accumulation pattern to you? No. So we've passed through 1, 2, 3 levels, and each of them was profitable. Okay, I'm going to turn on just some type of reminder of where these ones are, just in case you can't see it. And the pink boundaries are the ones where I would consider to accumulate if we put in an accumulation pattern. But this top one here at 30,000, that was just nominal. We reached 30,000. It's kind of just this area where we do get nice bounces from. And so if you were able to buy at 30,000 and then, you took some profit somewhere, just take some profit. This wasn't really for us to be holding for a long term. It was way above the red line. And then we had another area over here around 25,000 that lined up with this consolidation over here. Most likely there would be a bounce, and then you can take, wow, this was a lot of profit. So hopefully you guys made some money on that bounce, but again, not for holding. Drop down here to 20,000. Hey guys, that lines up with the previous all-time high, right? Maybe we front run it a little bit, and we could have extended this down a bit, to perhaps get the top of this consolidation area and the absolute top over here. But hey, I probably meant to do that and just positioned it a little weird. TradingView also sometimes moves these shapes and you have to correct it. But yeah, we got that bounce in this zone and then it bounced around a couple times. I mean, let's go to like the 6 hour. Yeah, you can see, we bounced squarely into this zone, jumped up, could have taken your profit, hit the bottom again, could have taken your profit, and then we started to break down, and you probably wouldn't want to hold that. But just like I mentioned about 3 days ago, 2 or 3 days ago, that we would probably put in a couple days of consolidation, and my expectation was that the weekend would probably hold as well, and that they would try to liquidate us, only next week. But these institutions, they're crazy. I mean, they are just bloodthirsty and relentless, and so they went for it on a Friday night in the middle of the night, knowing that America would be asleep and that there's a holiday on Monday, so the banks and all the institutions are going to be closed. And they knew that Friday was the quadruple witching. I made a video about it. It was the quadruple witching, and so there was low liquidity in the markets because people don't want to trade on a quadruple witching. It's when all the options are expiring at the same time, 4 different types of them. It just messes up all the calculations. And so a lot of people don't like to take risk on the quadruple witching day, right? And so they took advantage of that Friday witching. They took advantage of the long weekend. They snuck in like thieves, like murderous thieves, in the middle of the night, and they attempted to liquidate each other. They're not going for you guys, right? They're not going for you anymore. They're going for the institutions. They're trying to kill each other. That's the story of this chart. And look where we dipped down to. Lo and behold, we dipped right to the bottom of my very next zone, and then we got a nice bounce, right? So we can go ahead, this is obviously sharpening. You can just see just how these institutions are sharpening their dagger, right? So here's their knife, right? And here's their knife, and then this knife is just stabby, stabby, stabby. Like they are just going for the jugular. And there will not be survivors in this, right? There will not be survivors. They are going to take every last dollar that people are willing to give up. They are going to go for the jugular. But guys, appreciate these zones, okay? Because most people would not have had a game plan in falling down here, and we were able to catch this bounce. We were able to catch this bounce. We were able to catch this bounce. and we're able to catch this bounce. Now, these things are lasting for shorter and shorter periods. At some point, you're just staring down the edge of a knife. And again, if you just consider my alpha channels, once we cross that red line, right, it's kind of like the bloodline, right? Once you cross the bloodline, you probably want to be waiting for an accumulation pattern to set in. You probably don't want to be, just guessing where this thing is going to stab next. It could go straight through the next zone. It could just, you have no idea what could happen as liquidity dries up in this market and as they savagely go for the kill. Like they could just try to kill Michael Saylor, and liquidate, his company, MicroStrategy or whatever. I don't know if Celsius got liquidated, but I believe that this is what that down thrust was about. And so, they might be going for 14,000 now, I believe that was Celsius's number, 14,000. And, we're headed in that direction. So they're just trying to build up the momentum, the fear. They're trying to get their assets together in order to leverage it, to take out these other institutions, and they are going to drive the market down. Now, they may be defeated, right? We have to accept that it's not easy to push past this red line. The lower we go, the harder it is for these institutions to win. It's just, at some point, the greed of the market comes back in. Things flip around, and people decide that they would rather to buy back in. You know, um, South American countries start buying more Bitcoin, right? Elon Musk starts buying more Bitcoin. These different thinkers, these different people in the world, these different institutions and individuals, they start buying back in. And so then you start seeing the accumulation pattern, and it becomes almost impossible for them to drive it any further down. And then we're at the bottom. But guys, we're not there yet. This is a straight down, bloody, falling knife, okay? So don't be under any illusions. And if anyone is trying to force you in to any type of a move, just remember what I said. Like, you do not have to be pressured. It's okay if you miss a bounce from one level to the next. There's so many different levels, okay? Just to be smart where you DCA in for trades. And don't hold anything, in my opinion. Just what I'm going to do is I'm not going to hold anything until we see that accumulation pattern. I'm sorry I'm repeating myself so much, but I'm trying to actually drill it into the heads of new people who may not understand this principle. And sometimes it takes like 10 repetitions for you to learn something, right? And I know new guys, some new guys are just going to hear from some other influencers, some crazy gurus, and from, these pump and dump groups that try to get messages out about what you should be buying or, what you should be leveraging or blah, blah, blah. And then they dump on your head, or it turns out to not be true because they don't care about you. These different army leaders of different coins, it's all garbage, guys. We're just here to make money. We don't care about the technology. You know who cares about the technology? The people who start the companies. And there's only two people who start crypto companies. One is they believe in their technology, they're going to continue to work on it, they're going to try to get the funding. Has nothing to do with you. You're not on the team, right? You're here to make money. And the other one is the scammers. And the only thing you want to do is avoid being a victim of those scammers, right? Like potentially Do Kwon is being investigated by the South Korean government, right? So we've passed through three of these zones. We've taken profit. You guys have followed the motto of this channel to always be taking your profit, always be selling. And we're reaching the potential hold zones where you're still going to trade and you're still going to take your profit, and only when you see a massive accumulation building up, only then would you consider some hold positions. And, we can talk about that later. But I just want to remind you guys, be very careful. This world is in a very fragile place right now, and you don't want to be holding your life savings in garbage, which is what crypto is. It's just garbage. It's too new. It's like the internet in the early days. It's too new. There's just a lot of garbage on it that needs to get sorted out, that needs to get weeded out. Those institutions, those coins, those tokens, they need to actually fail, and it's a good thing for the industry that they do fail so that the strong stuff can survive, right? That's just how it works. That's just how markets work. And since we don't have many fundamentals like profit and loss statements like we have in real businesses, you know, it's just a bloodier process. It's a lot more wishful thinking, and it's a lot bloodier process on the downside. So let's go ahead and just think what could be a really good target, right? Well, I would just suggest, of course, that we could talk about this area right here, perhaps 11,000 to 12,000 as a pretty good area to kind of just target in our mind. Of course, I have the $14,000 to $15,000 area marked out because that's also a possibility. But really, you guys know that I've always been targeting this kind of $11,000 area, and that these other ones up here have just been for trades. Just gonna make them a little bit softer, just to remind us that's basically just trading areas. And if we do start putting in an accumulation pattern, then we come back to them, right? Because price would actually start to rise again, and we could come back to them. If price started to accumulate up, we would cross back into those zones that I just kind of ghosted because we've moved beyond them. And then we might consider to buy at those levels if we get stuck there and start to make like higher lows for several, multiple weeks, maybe even a couple months, right? Where we start putting in that accumulation pattern for a long time. No rush, absolutely no rush to do it, okay? And then we can consider to DCA in for hold positions in those higher zones. But until then, we're just trading on our way down. And what I'm really targeting is this 11,000, potentially 14,000. And just if the shit really hits the fan, then perhaps we can be talking about that 10,000, or even something as crazy as as 7,500, let's say. I mean, I'm gonna put my neck out and just say that that is possible, just because of how fast we rose during the COVID times. And that would be at the very bottom of my gray line here. And I honestly can't see us going below that. Maybe I could see 4,000 to 5,000 in just some type of nuclear war scenario or something, right? And I'll put that on the table just in case, just in case. Um, I have no problem with thinking about these really just crazy outcomes because, you know, the world is a strange place. And if we look at perhaps this kind of diagonal that we have going on here, you know, maybe it's possible. All right, you see this bounce right here on 2017, and this kind of top here, using this as support, bouncing off of it here. So maybe 5,500, right? Maybe that's not as crazy as everyone might think. If I put a little box there, I'm not gonna like make it a bright colored box. This is the region I'm targeting, but you know, can I be open-minded to this? Yeah, sure. Sure. Why not? Why can't I be open-minded to this? It makes as much sense as, any of these other arbitrary numbers, right? Whether we're going by fibs or whatnot. And if we do pull the fib from the bottom to the top, you could see there's an 886 right at that 5,000 based upon the log scale ratio. The log scale ratio of fibs. Now, most people don't use the log scale ratio of the fibs, and it's not a common one that we've retraced to or anything, but the fact that we do have just a crazy world economy, the fact that we have a double top that could be slouching over more than anyone thinks is possible perhaps in the commodities markets. We have that kind of commodity super cycle bust. You know, there's just a possibility that we could dump to this level, and I'm not going to dismiss it. In fact, I'm probably the only person that you'll hear actually leaving it as a possibility. But otherwise, we would probably be looking at these standard kind of fibs, the linear fibs, which would put us anywhere between, like 18,000 to 11,000 as a possible zone for retracement. And that is the common one. So, if we're looking at just these retracements here, you can see 786 to the 886, right? So in that area, yeah, this one got a bit lower. But in general, you can see that, 18,000 to 11,000 would be pretty normal. And then, yeah, if we get a little bit lower, then maybe that $10,000, right? So that's why I have that one there. It does line up with a lot of good support. And then if we're talking about just some type of crazy situation and we end up breaking that area, then I would immediately be open-minded to this kind of, this kind of 7.5 zone or whatever you want to call it. Not much there. Not much there for support. It's really like this. Anyway, somewhere in there. Just in the middle of all of this, right? See this kind of hold right here. You see a lot of support right here, right? And so who knows? Who knows? Maybe 6,000, maybe 7,000, maybe 8,000. Just there's some things to catch us over here, right? Like this is a whole zone. And then failing that, perhaps this kind of area right here, this top right here, the closed candles up here. And so that's why I would suggest perhaps 5,500, 6,000 could also be possible. And guys, I'm actually going over a lot of different ways to look at this just because nobody has a crystal ball. It could turn around right at the 786. It doesn't have to do anything more than that. It could just recover now. I suggest that it's not going to because, the world economy is in such turmoil. Like, why would it? And we also have some, some interesting patterns. What am I doing? We also have some interesting patterns on the chart, which is, sorry about that. Just trying to orient my charts there. Let's get rid of that. Get rid of that. Where we have these kind of strange, head and shoulder patterns, where I think I can just get rid of that fib. You can see way back here, this isn't the beginning of the chart. There's a much more extreme extension to this chart, but this is just something to look at. You can see we have this line of kind of support, and then we have this kind of like measured move, to the top of this pink line that is at this diagonal. and then that measured move pretty much takes us to this green line, and that's where you could buy in at this second point. You notice the second point is way above this one. So here's the first point, and then here's the second point. Same pattern, just much bigger. Here's the kind of support line. Here's the measured move to the pink line on a diagonal of these tops. And where does it break down to? Right there, right? Not perfect, not 100% perfect. My line's also a bit off, but you know, pretty much got that move. Right there is where COVID, you know, wicked down to. And so just following this type of logic, which is completely original, I made this concept up totally myself. I might be wrong about it, right? And then one thing you'll notice is this one's pointing up. This box is way higher. This one's pointing sideways. The box is almost even with this one. And then we could suggest that this one is going to point down. So the chart is kind of like flopping over, right? And so here's the support line, right? Holding up the top of this, just like the top of this. And then we have the second bounce. You know, it's just one top. We just call it the second top, first top, second top. And then we look at the height of that move, the biggest height of it, and it would suggest a drop down to this area. And then, of course, if we used our fibs, that would bring us near the 886. It could be in the middle here. It could be the 886, but it would suggest that there's probably going to be some continued dropping, you know, that we're not at the bottom yet, and that, you know, we may have just a little bit more to go. Sort of like what we did here, right? We got way beyond the 886 even, but we didn't reach a full retrace. We just kind of wicked down. And so the exact fib number isn't important in this model. It's just the measured move is what's important. And even if we were really conservative and took it from this line and just went like this to the pink line, then the move would still break down to approximately 12,500, which would give us support right here, right? Something like this. Maybe bounce here, here, here. But the 886 is down here. So I'm just putting it in the middle between the 886 and between the top here, just because I don't know where it could wick to, right? But the measured move just suggests that this is kind of possible, and so that's what I'm looking at. I'm thinking maybe one more slam down, and then potentially, you know, a hypothetical bottom if these extreme zones don't end up happening. And there's a reason why we can consider these type of extreme zones, and I'm not really sure if we should get into it, but I kind of feel like you guys deserve to hear it. And it's not set in stone, but you know what? Screw it. Let's just go ahead and take a look, right? So let's go ahead and jump over to the NASDAQ 100 mini futures. And you can see in the year 2000, we had another commodity super cycle, and it just crashed like crazy. It crashed 83%. Of course, crypto didn't exist back then. Crypto was created as a response to this type of crash. And so what happened? It took 16 years to recover that all-time high. We're talking about the stock market, guys. In the year 2000, it took 16 years to recover from that commodities supercycle drop. Well, crypto is born, and it was born into the middle of another supercycle, right? Where we just have this huge ramp up in prices, And let me see if I can take this off log scale. There we go. Yep. So this is what it looks like. And so, 16 years later, finally this thing is really in another super cycle, and it's crazy dramatic. You can see just as dramatic as this ramp up, pre-2000. And what do we see here? First of all, this was an 83% drop, right? What do we see here? Well, we see some type of support line. And we also see some type of, support line here, some type of resistance, possible resistance, where this was previously resistance and now it could potentially be flipped into support. And so what's the theory that I'm making here? Okay, and again, like you're not going to see this on anybody else's channel. Guys, I'm making original concepts. If you guys see people, using my fractals and, doing all that stuff, a lot of these guys are like just copying what I'm doing. I know 4 YouTubers who have been copying things that I've been doing. Okay, original content that I've made up, and they don't give me credit for it, but they almost copy me verbatim, right? What I've been saying, and that's multiple times. So I know 4 YouTubers who are doing it, and they don't give people credit. Whenever I use something from another YouTuber or somebody who has an original idea, I give them credit. I say their name, and usually I mention it a couple different times in a couple different videos just to make sure that we all know where knowledge comes from. If you guys are using some of my ideas, and I know you guys are watching because I heard you use my exact wording, please give me credit for it, okay? And so this is an original concept. And look, I have 2 potential, I'll call them hyper lows, okay? They're hyper lows because we don't know if we're going to get there. We could potentially find support in this area. Okay, we don't have to just crash all the way down. That's we can't just assume that something is going to happen. But again, like the 786 and the 886 tends to be a pretty good area for retracement, right? So let's say that we are going to retrace to these super low areas because it's a super cycle that's busting just like over here, right? 84% down. And that potentially we're going to drop, maybe 42, maybe 47% down, something like that. Well, what I can show you is just a couple of these different cases where here in 10/1, 2018, these stocks dropped 24%. And then here in 2020, it dropped 30%. Well, if we go over to our charts, let's see, it's a 9/24. Okay, if we go over to the Bitcoin chart and we just try to find 9/24, let's see. Got to make sure I'm on the right one here. This is, all right, 9/24, 2018. Right here. Right, basically here. You can see that crypto came down about 50%. 50%. And then here's the COVID crash, right? February 2020. And crypto came down, you should say Bitcoin, about 65%. Right, so 60%. Just keep this in your mind. 50% and 60%. Now, and this is how it behaves during a crash, right? This was a crash. A crash. This was just a blow off top correction. This was a crash that affected other markets. And so let's go ahead and go over to the NASDAQ again. And you can see, what is this? 24% and 30%. What's the ratio there? Well, if we think about it on crypto, right, on Bitcoin, it was 50% and 60% on those respective dates, on those crashes in the market. And so what does that give us? That gives us a ratio of 2x, right? So whatever stocks crash, and on the Nasdaq, on the S&P it's something like 3x, but on the Nasdaq it's 2x, right? Whatever the Nasdaq crashes, it's about 2x in terms of percentage on Bitcoin. How much have we crashed so far? Approximately 34% here. And I need to go to the CME chart. We have crashed approximately 70%. So let's say that, keep that in mind. 70% we've crashed as of Friday, because the CME is closed on the weekend. So as of Friday, we collapsed 70%, and then we go over to stocks, and you can see that stocks crashed 35%. Let's just say estimate 35%. It says 34, but just say 35, which again is that factor of 2x. That means that it's still behaving at a factor of 2x. If the stock market comes down to this support level or comes down to this support level, right, that's going to be 42%, or potentially in the middle here, 47%. And then at the very bottom, it's going to be 50%. I think you guys know where I'm going with this, right? Because that's scary. That's scary. And everything crash that takes the NASDAQ down 42%, right, equals what? 84% on Bitcoin, right? 47% down on the NASDAQ equals negative, something like 94%. And guys, it's actually more, right? It's not exactly 2x. And if the NASDAQ falls 50%, Bitcoin goes to zero. 100% retracement. So something has to stop on the Nasdaq within this area, or Bitcoin gets broken. Right? Bitcoin gets broken. You hear that expression? Send it to zero. Look, this is how Bitcoin behaves in every single recent crash, including up to today. That 2x ratio with the Nasdaq. If the Nasdaq crashes down to support, this support right here, where this wedge is kind of being formed, and where it bounced here, right? It bounced here, it bounced here, it bounced here. Is it going to bounce there again? If it does, then Bitcoin can be sent to zero. What does that mean for crypto? It means the Ponzi's over. Right? The Ponzi's over. So you better pray, if you're in crypto, you better pray that stocks bounce off of this higher line around 42% down, and the Bitcoin stops around 84% down. What would that look like? What would 84% down look like on the Bitcoin chart? $10,000. Where's my DCA zone? All right, right in there. Right in that area, right? Got 2 of them. In case we wick below or in case we get a little bit front run. Just got 2 of them there. People say, why don't you put your buy box right on whatever number you're thinking about? Because we can wick it down a little bit and we can get front run a little bit, right? Why would my DCA box be exactly on a number, right? I don't care about the exact number. I care about having purchase orders set up to catch the wick or to get the front run. I don't want the exact number. I don't care about the exact number. If everyone targets the exact number isn't going to happen, right? Everyone targeted 100K Bitcoin, and 100K Bitcoin did not happen. The market will take advantage of people who just, they're like, they're obsessed with like just clean numbers or something. It's okay. You can be dirty and scrappy. You don't have to catch the absolute bottom. You just have to have your own strategy, right? And also, this strategy may not be perfect, so I can spread it over 2 areas. That's all. That's all. It's no big deal. Just like this one down here, it's just a fast and dirty. Just using my own logic, my own thought process to just make sure I have some capital, just in case we do get sent. 90% down, right? What does the good old calculation here say? 94%. 94% down. 84%, 94%, 100%. Those are our options, in my opinion. We could bounce in this area, potentially. We could bounce here. And so we should say that we are potentially near a bottom for at least a relief rally or something. But if we don't get that, then we could very easily continue down here. Let's say to this golden zone, right? Maybe kind of lined up with the top here. Kind of wick down there or something. And that's still 42. Still 42, okay? Like the top of this area right here lines up with that 42, which is that trend line. So got to keep that 84. I'm sorry, guys. I don't see anything else, except where we are right now. So 84, 94, and 100. Where's 94% down? Right, something like that. $4,000, $4,000, right at the support of COVID and 2018. What would that be? 100% retracement of everything fueled by that free money, by that money printing. And it is possible. If this market turns risk off, yeah, we could be talking about a full reset. Full reset of COVID money. All right. Do I think that Bitcoin can actually go to 0? No. But do I think that we could get a full reset? I think that is possible. I would believe that just like how I have the stock market lining up on that diagonal, I also have this diagonal here for a reason. Because I believe that overall, the price will appreciate, that people will front run any such numbers. And so where's my box? Right here. Right at this area where we just kind of like blasted off, and it potentially could get retested. Right? Look at this wick all the way down to where we blasted off over here. Got retested. Shouldn't be surprising if we retest this area. Right? Just like it shouldn't be surprising if we retested this area where we blast off from. We can potentially come down here, 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 and in a crazy situation, maybe a full reset of the COVID era. You don't know. You don't know. So that's why we just remain open-minded to these things. And so far it's been working out. Boom, 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 right? Just one by one, just knocking it out of the ballpark. The next one might be here, somewhere in this area. Can't get it perfect. Can't get it perfect, guys. But we can, come pretty close. I think a lot of people are a little bit delusional about what's coming next. They really have this kind of concept in their mind that's only been born out of the free money, out of the era of free money. They're just too young. Just too young to know the eras of really serious recessions in the United States, the eras of high interest rates in the United States. They only know the free money era, ever since George W. Bush, right? And if this market is having a super cycle correction, we could see these lower areas. Don't kid yourself. Don't kid yourself. So what we want to pay attention to is an accumulation pattern. We don't want to be having a price target. If you guys go all in and you start buying a whole Bitcoin or whatever at whatever price level that you just have in your mind that you just think is a good price, just remember your valuation of that price is completely arbitrary. It's not based on anything except the Ponzi scheme, which is the bubble that's bursting. And so we're going to come back down to reality, and that reality could be a full reset of the market. You might not want it to be a full reset of the market, but it could be a full reset of the market. Boom, 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 boom. All right? Maybe 5,000. If you want to target a number, target 5,000 and then just trade everything above that. I wouldn't recommend, to anyone I cared about to target a number above 5,000 because we have no idea if this is going to fully reset. This is a commodities super cycle correction. It's not a crypto correction. It's a total world commodities super cycle correction. It's not a crypto super cycle. Okay, it's not whatever BS ran, on Crypto Banter was talking about. It's this, guys. It's this. 16 years to recover. You do not want to be locked in at a full Bitcoin halfway down this move if it's going to take 10 years to recover. You want to wait to the bottom and the accumulation pattern. Please, 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 please do not target a number. Target an accumulation pattern. Do not screw yourself. And remember my motto, always be selling, always be taking your profit. You don't believe that 10 years could go by before we see these tops again? You're just not old enough to know. Just not old enough to remember this stuff. It's not your fault. It's not your fault. You haven't experienced it before. But be very careful. Yes, we could have just a regular correction like this, and then maybe we bounce up and, keep going because just feds all over the world start printing money again in 2024 or, 2023 or something. But when everyone who is really brilliant in, in economics and in finance, all that stuff is talking about how everything is in a bubble that's popping and that no industry is going to be left unscathed and that we may be seeing a commodities supercycle burst, then just consider the market really does this sometimes. And do you have 16 years to hold at whatever price that you're going to buy in at? Probably will get relief rallies. Most likely will get relief rallies. But this could be much worse than what you expect. And I just want to bring that realism to you so that you don't do anything stupid. Now let's take a look at the S&P 500 to see what that super cycle looked like on the S&P. It was very similar. You could see you got a nice bottom here at 50% down. But remember, Bitcoin operates 3x on the S&P. So 50% down is not a good number for Bitcoin because that would be 150% down, right? So 50% down, and then it got a relief rally basically to its previous all-time high. And then it smashed down 60%. And then after, 10 years, 2000 to 2013, it finally went above its previous all-time high. So it took 13 years to do that. 13 years. So 13 to 16 years is a real possibility on commodity supercycle bursting. And look, this looks like commodity supercycle bursting. And look, we have this trend line down on this one also, right? I'm not trying to fool you guys or anything. I'm not trying to hurt your guys' feelings or anything. Boom, boom, boom. And we have one, maybe above it. I don't know, something like that, kind of. That would be 39%. And still, that's going to be 100% on Bitcoin because it's 3x on crypto. I mean, on Bitcoin. And then let's go ahead and do this one. There's one like right here. All right. And yeah, markets really do move like this. I'm not making stuff up. Traders really use these type of weird lines, these weird diagonal lines. And no, they don't use just the higher time frames. They usually use the daily because they're trading daily. Most of these guys close their positions at the end of the day. They're not like crypto guys. They're not 24/7. They trade on a day and then they close out and they go home. They get a nice sleep. They close out on Friday. They have a nice weekend. They come back on Monday and they trade that day. Most of these traders are trading on the daily. They are not trading on the weekly or the monthly. Investors work on the weekly or the monthly. And this is not an investor's market. This is a trader's market right now. It's a trader's market. The most generous one is 28% down. That's still 90% down on crypto, okay? All right, let's just move this over so it lines up with the green line perfectly. Let's just get a really, really, really good number. And then let's take into account this kind of resistance up here so we can just move it up a bit. So 27. Right? 27 times 3, 81% down. That's the most generous number that we could give. The most generous. And then let's kind of just think about this kind of area as support. So let's move this one like here. So 37. You can't even do it. You can't even do it. It's going to be over 100%. So let's go ahead and go to Bitcoin. What's 81%? 81% down. Right? Going to be on this level. Oh, look where COVID wicked to. That dotted line. Look what the S&P is suggesting. That dotted line. 13,000, right? Maybe if we move sideways a bit, it could be 14,000, right? Because this could act as support in a way. We've seen this price action act as support and price moves up along these diagonals. So these alpha channels, they work pretty well, guys. So hey, you know, not sure what else to tell you, but we've got the front run covered, we've got the wick down covered, we've got the fibs kind of lined up in these price areas, we've got the most extreme bottom possible. We're pretty well covered over here. And if we just look at the chart, right? Get rid of this dunce hat. Fade that out a bit. If we just look at this chart and see where we are, we can see we're going to start entering those juicy areas. And whether we do end up getting down here or right here, or even if we bounce off the red line, we're going to be looking for the accumulation patterns. We're not going to be targeting numbers. We're not going to be the idiots targeting a number and just buying at certain prices because somebody told us that that's a good price. No. The only thing we need to know is that this is overheated. This is institutions at war with each other. This is capitulation. And then we need to find the accumulation. Don't have to buy the absolute bottom, because you could be stuck in that position for 10 years, for 13 years, for 16 years. You could be stuck in those positions. It is possible. We've seen it. We've seen it. I showed you on the charts. We've seen it's possible. If this is a commodity supercycle and this is a double top, a digital asset, the same way we had a crash in 2000 for the internet companies, we could see something very dark happen in crypto. I'm not calling that. We're not at those levels that I can call that. I'm just saying, be smart. Don't do anything stupid. Be smart. Always be taking your profit. When you get a bounce, you take your profit. If we fall down some more, buy in lower. And then the next bounce, sell again. It's a trader's market. It is not an investor's market right now. Do not let anyone tell you it's an investor's market right now. It is absolutely not an investor's market right now. It is the opposite of an investor's market. This is a trader's market only. Until stocks and crypto put in accumulation, not just crypto. It can be a fake out on crypto, just like fake out up here, fake out up here. Don't get faked out. That was your alpha for the day. Stay safe and happy trading.